Hey everybody, welcome back to another edition of Dr. Stocks talking about the market. Market Talks with Dr. Stocks. It is the 1st of April, and this is not an April Fool's joke. This is the real deal. And I'm coming to you from our live trading room over on Discord. And if you're interested in joining us, watching me trade throughout the day, I'll tell you exactly what I'm buying and selling and shorting and going long. You'll get the ticker symbol, my entry price, stop loss, target price, reasons for the trade, and all of that. And we trade everything in the live room. We go with everything except for options, but we do e-minis, micro e-minis. We do ETFs, inverse and long, in 3x, 2x, 1x, all kinds of stuff, and plenty of stocks. If you're interested in joining us, go over to drstocks.com, DrStoxx. Been in business every day since October 2002. And if you want to join us, click the subscribe menu, scroll down to live trading room, and you are good to go. All right, let's start by looking at the map for today. So this is a 10-minute chart of each of the four major indexes, the Dow, the NASDAQ, the S&P, and the Russell. And you can see that right around 10 o'clock, we had some data come out at 10 o'clock. We had an ISM manufacturing number, which was a low miss. Not a big deal because manufacturing is not a big part of the economy anymore. It's the services number, which we'll probably get tomorrow, that is the key one. But still, a miss is a miss, not a good sign for the economy. And then we had a miss on the downside with the jolts, new job openings. And as I was saying before I got on the mic today, that can mean some pricing pressure in the labor market. Not a good thing, right? Labor costs going up, uh, corporate profits tend to go down. So the market's a little bit skittish today. It's been in this long term downtrend. I shouldn't say long term, it's been in a downtrend for a month and a half now. We hit all time highs back in February. We came in most of March. We got a little bit of a dead cat bounce right at the end of March, and now we're starting to roll lower again, heading into tomorrow, which is Liberation Day. Yay! Okay. It's not just Trump, right? All politicians take their policies and give them really nice sounding names. They all do it, so it's not just a Trump thing. Anyway, tomorrow after the market, 4 p.m., Trump is going to address the nation and tell us exactly what's going on with all the tariffs. I hope, and the market hopes, he's very clear, specific, and gives us an exact route for where we go from here. We also need to hear how many countries, or if there are any countries that are starting to negotiate, hoping to scale back on tariffs. The market's already priced in a pretty high level on the tariff front, so I don't think Trump can give us any worse news than we've already had. But the market is hoping for A, clarity, and B, some sign of hope that things are going to scale back. If we don't get either of those, I do think that that will likely trigger, maybe not right away, but will likely trigger the next leg lower in the market. And I do think we've got a pretty good leg lower coming. So you can see this was an algo driven rally right around 10 o'clock after the data came out. The data was bad. The market said, hey, we hit some intraday levels of support. Let's generate some profits by clicking on the algo program, high frequency trading stuff. And that's what they did for about 15, 20, 30 minutes. There wasn't a whole lot of bullish follow through once they toggled off. And we've been kind of trailing lower ever since. No, it's not a bad day. We had a really big slam a couple of days ago and a gap down yesterday morning that got bought back up to pretty much close near even. So we're starting to see some bullish signs. That's always good. And we are, I have to say, again, we are very, very close to a major market bottom that could very well give us the best opportunities that we've seen is since the October bottom of 2023. That was also a major market bottom. We bought that very heavily, and we're not yet at the place where we can buy heavily, but we are getting very close. And some of the signs that we're seeing in sentiment and market internals and companies that are lowering estimates and all the bad news coming out, bad, 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 bad. We're seeing a maximization of that. We're starting to get, the Barron's front cover starting to cover all of these negative things. That's usually a sign that we're very close to the bottom. but I don't think we're there yet. So let's take a look at the charts. First of all, just a quick word about this squiggly line. Um, this squiggly line indicator here. It's called the cycles indicator. And you have thin little lines that go up and down frequently. Those are short-term cycles. You have thicker lines that go up and down less frequently, and then you have big thick lines that go up and down least frequently. And those are cycles set at different time periods. So cycles theory is something I'm not an expert in. I don't even pretend to be, and I'm kind of trying to get up to speed on it, but I'm really not anywhere near where I can confidently talk about the indicator. But I've got a guy in my pro trader group who trades cycles, and here's a big deal. And this is the only reason why I'm really interested in it. Jim Simons, greatest stock trader of all time, most successful hedge fund manager of all time, 65% annual return after a big 5% management fee and as high as a 44% performance fee. You just can't, you got to know what you're doing. And his whole approach, he was trading, making 1 million trades a year with his team. His whole approach was mathematically based. He did all kinds of things with those mathematics, but one of the things, and he didn't give away the secret at all, but one of the things that he was interested in mathematically making it precise was cycles. So, hey, if Jim Simons was interested in cycles, I'm going to be interested in cycles. So I've been playing around with this indicator and getting a little bit of help from my friend who does cycles in the pro group. And basically the theory is this, right? You've got a lot of junk that goes on throughout this indicator. You've got the short term going up and the long term going down, and that typically makes for a choppy, tight trading range bound market, as you can see in this area right in here. However, every now and then they start to line up in a way that you can see. Like here's a whole bunch down near the lows, right? Here's a whole bunch up near the highs. Here's several up near the highs. Where's another clear one? Don't see too many clear ones. That one's kind of up at the highs. Anyway, you can kind of see when they do cluster like that. When the long term, the short term start to line up close to the same time, you get market tops and bottoms, right? We had a market bottom right here. It came a little bit late, right? After the long term started curling up again. And then we had a market top just a few days ago. And that is what caused, well, if you're a cycle guy, you're going to say that's what caused this recent sell-off. All right, so enough about that. I don't want to say anything more about that. That's pretty much all I know. But it's an interesting tool. I guess one thing you could do is just kind of focus on one of these cycles, like take the I guess the green one. The green one has really high oscillation, so that maybe it's a little more correlated to the price. So you can see when the green is low, the price gets low. When the green is up high, it tends to stall. If it doesn't just go down, it tends to at least to stall. And then when the green is low again, well, did that really go up? Not exactly. Then it rolled over on that top, and yeah, okay, never mind. It's not exactly lining up the way I thought it might. Okay, anyway, just to say that we're right now in a place where there is a pretty good conglomeration or a cluster of these topping out, both long-term and short-term. The longest term is the purple. It's still going up, so there may still be a little bit of upside pressure or some buying of the dips. But once that purple line gets up to the top, like it did here, that's pretty much where you want to start looking for the next leg lower. And it looks to me like it's getting pretty close to that. Okay, but let's look at the indexes themselves. So we've got the S&P 500. This is your key line right here. On the upside, it held as support, broken support, near resistance, and now we're pushing back lower off of that. There is a little bit of support down here at 5,400, and then a little further down at 5,200. Those are my two targets for the next leg lower. I think we're probably going to get down to 5,400 by the time we get out to end of April. If and only if the whole tariff thing and the trade war starts to escalate, doesn't start to de-escalate. If it starts to de-escalate, then I think that we can throw that out the window, and we'll probably get something like a double bottom at 5,500 after the initial shock of all these tariffs gets out there and gets priced in. And then, so 5,500 if things de-escalate, 54 to 5,200 if things escalate. And I think the way things are going, every time I hear more Trump speak about the tariffs, we are escalating, not de-escalating. So if that's the trend, and we always trade the trend, then it seems to me like April's going to be not the best month for the market. So that's the S&P. We've got a few numbers to look at on the NASDAQ. So the NASDAQ was your classic bear flag that broke on like Thursday last week. We had a really nasty day on Friday. We had a gap down on Monday this week. Now, today is Tuesday, by the way. Gap down on Monday, and then it kept going lower all throughout the day, hit 19,000, right on the nose, 19,000, started trailing back up, and then ticked a little bit higher today. We took out yesterday's intraday high, which is typically, when you get a 3-bar reversal like that, that's typically a buy signal, but there's no follow through just yet. And right now we are flirting with going red on the NASDAQ if we're not there already. Yeah, we are there already. Yeah, just a bit. We're down 0.2% on the NASDAQ, 0.1%. So, yeah, it is what it is. So how far low can this go? Well, we have some, like the S&P, we have 2 pivot points of support, 18.3 and 17.8. I would say around 18,000 is probably going to be the low point at the end of April, if and only if we get escalation, not de-escalation. Now, the other thing we have to keep in mind is that we're starting to see, and we're going to get a big data print on Friday, we're starting to see some weakness in the labor market and some weakness in production. So if we start to see that continue, if those trends continue, and jobless claims on Thursday will be a closely watched number as well. If it's up there 260, 270, you're going to see some fear. And if we have a big mist on the downside on Friday with the new jobs data and maybe a tick up in the unemployment rate, you're going to see some fear. And look, we've got the VIX. Where is the VIX? Where is my VIX? There it is. 22.5. So anything above 20 is a market that's really saddled by fear. Between 15 and 20 is kind of a nice sweet spot for volatility trading. Anything below 15 is just, throw all your money at stocks, buy whatever is not nailed down, and hang on for the ride, because that's a nice, easy bull market without a whole lot of volatility. But that's not the market we have. We have a volatile market, and the trend right now is up, right? The VIX is climbing higher. We don't want to see that, but it is simply a part of the macro that we're given, and we have to trade it. Okay, so that was the S&P, the NASDAQ. Let's take a quick look at small caps. Small caps have just been the weakest link all around. When you've got interest rates pretty high, you've got borrowing rates really high, you've got inflation numbers still pretty high, all of that weighs heavily on the small caps. So they were starting to see some light in the tunnel because the Fed cut rates, right? We had a 2 big rate cut, and they're promising, at least suggesting, we're going to get at least 2, maybe 3 by the end of the year. That's good for small caps. But if inflation goes back up again, and if we get into a trade war, it's the big guys that are going to win. It's the little guys that are going to get raked. So I'm not a fan of small caps except for shorting them. And yeah, we did a little day trade. We did a little day trade in M2K as an overnight trade. Got off to a great start, and then we had the data come out, and it went down. It's still above our stop, and we got stopped out just like minutes before it rallied back up, and we got the nice move we were expecting to get. Anyway, it's trading 101. All right, let's take a quick look at Bitcoin. So Bitcoin is actually starting to do some positive things here. There was a bear flag fallout right there, that red bar. That was Friday last week. Gap down yesterday, didn't get going very well. And today, however, showing the potential of at least on high volume of a 3 bar reversal. So Bitcoin might play a kind of safe haven with a lot of volatility and with the inflation out there, and the dollar's been quite weak. And if we get into a real trade war, the dollar might become very weak. Gold, that's why gold is going so high, right? Gold is really flying to new all-time highs almost every day. It's down just a smidge right now, but it's been doing really well because people are worried that the dollar is going to crack and inflation is going to go way up, and then the Fed's going to have to maybe raise rates again, or at least not cut rates again. It really could be a very bad mess, and you're seeing that in gold. Right, gold is saying we're heading into a recession, we're heading into inflation, we're heading into a weak dollar, we're heading into a flight to quality, and all of that is why people are buying up gold like crazy. So I do think gold has still got a good run all the way through August, all the way through April. Along with the miners, they still should be doing okay. They've been kind of catching their breath after a good run, but they still have a good, healthy leg up ahead. And yeah, and I also think oil's not going to be very healthy either. So it's had a little dead cat bounce off the lows, starting to roll over today. A short of oil is probably a good place to be over the next couple of weeks. Yeah, why? Because when inflation is up and the economy is down, you've got um, people using less and less fuel to get to places, and that just pricing pressure, right? Supply and demand curve. Remember that from Econ 101. Supply and demand curve. Simple, simple, simple. All right. That's all I wanted to say about those guys. Let's take a quick look at some of the mags. And I have to be honest, I don't have anything. I don't have anything except for a handful of like unknown names that are still up near 52-week highs inexplicably. They don't know what's coming yet. Um, so I've got a handful of those names. They're in my 90 scanner in Market Surge, and I'll share those in the room in a little bit. But for the mags, let's take a look here. Netflix is the worst off today. It was the best mag for so long, right? As the market was coming down to multi-month lows, Netflix was still rising, still going higher. It's still not a horrible chart. We're still well above the pivot low from March, but it's yeah, I wouldn't be a buyer. I would not be a buyer. Qualcomm's coming down to 150, which has been a very, very strong line in the sand, as you can see. Every time it gets anywhere near 150, it has held and reversed. Maybe not this time. Maybe this time things are different. Avgo, I really wanted to to add some Avgo. We do have, I think we have it in our wealth building portfolio, if I'm not mistaken, and I have some in my long-term family fund. And I've been waiting and waiting, waiting to add a little bit more. But if April's going to be bad, Avgo is going to be bad. And you've got this CHIPS Act thing. You've got a new committee that's coming on board to regulate that. And I don't know. Anytime you get the government too involved in the pricing of commodities, products, I think that that's not always a good thing. So anyway, Avgo is down at the line of soft support. I call it soft because it's in a downtrend, so you can't expect too much of a bounce, maybe back up to the 21. But I'm not sure that's going to come anytime real soon. Cisco was doing really, really well. It's still doing really well. It's just kind of lounging down here and maybe forming a little bit of a bear flag. It's like the one big company, the one big tech company that just hasn't cracked yet. Yeah, it just hasn't, but doesn't mean that it won't. So there's Cisco. So Nvidia actually double bottom, bullish divergence, not horrible, right? The only problem is that we're down below some pretty major former support, now resistance. So the upside is a little bit limited. I do think that Nvidia probably over the next couple of days can give a little bit of a bounce. Maybe one of the few mags that does bounce over the next couple of days, despite what we hear on Wednesday afternoon. but I really wouldn't expect it to get back up above that support until we get a lot more clearance. Now, here's another statistic, and I forgot to copy the chart that I saw this in, but there's a chart that lists the S&P 500 not as an index, but as a rating of earnings expectancy, or the sentiment regarding the next quarter's earnings, right? And you can see that these things tend to rise higher when the economy's growing and in a good space and everything's firing on all cylinders, and then they tend to fall when things get a little unclear and confusing. And right now we are down at multi-year lows for the uh, for the sentiment about forward earnings for the S&P 500 companies. That number, by the way, is a function of upgrades, downgrades, and estimates. So I don't know the formula, but you plug those three numbers into a formula and you get the number. And with all the 500 companies, you take some kind of an average. We're down at multi-year lows. Why is that? Well, I think there's only one explanation, and that is that CEOs don't know. They don't know what's going to happen next week. They don't know what's going to happen tomorrow afternoon. They don't know what's going to happen, if China retaliates and the EU retaliates and Canada finds the trading partners other than us and Mexico, blah, blah, blah. So those are just a big unknowns. We really hope tomorrow that Trump comes out and he tells us, okay, I'm putting tariffs on A, B, C, D, and E. I'm exempting B, C, D, E, and F. Countries X, Y, and Z have agreed to negotiate. Countries A, B, and C have decided they're going to wait. So if we get that kind of clarity, I think the market might be okay. We get a double bottom. We start to rally back up, not straight up, but I think April could turn out to be a pretty good month. If and only if things don't escalate from there. So we need clarity. As I said, we also need some hope of de-escalation. I don't have any great, I'm not holding my breath for either of those things. Okay, Apple was green early. It's actually not too bad, right? It had a, so as you see, the S&P and the Nasdaq are starting to get closer and closer to the March bottom. April is more or less starting to print some higher lows. That's always good, always good. So this, however, could be a bear flag, and Apple has been making these bear flag movements and cracking them and then going straight down after that. So we can't be too excited about what's going on with Apple, but of all the mags, it's certainly not the worst. Okay, that's probably, I don't know, none of the rest really. Here's Facebook, which is up a little bit today, but it is below support, now resistance. Google, same thing. Below the trend line support. Anytime you break a long-term trend line support, you've got some trouble. The best thing that can happen after that is you get a trading range for a while. So you set a new level of lows, you run up against a level of highs, you bounce back up for several months, you discount all the fear that was causing that crack of support, and then you launch a whole new uptrend. But once you have broken the long-term uptrend, there's really no going back unless it's an immediate a bear trap. If it rises back up and reclaims that STL, which would be way up here right away, which it kind of did right here, right? It just did that a little bit ago, couldn't hold it, right back down again. And I probably don't have that trend line right at the right spot, right? And it goes way, way back, way back. I don't know, way back here in early 2023. So that was a major trend line that broke. Tried to reclaim it, couldn't. And once that happens, then really your best bet, the best thing that can happen is a trading range that consolidates that move, and you get up and down, up and down. And of course, you can trade the trading range. You buy the support, you sell the resistance. That's not a bad thing. That's trading 101. But as far as really buying Google and expecting to get 40, 50% by the end of the year, that I don't see that happening. Okay. Microsoft, pretty much the same story. All right, Tesla's kind of in its own, doing its own thing today. We're long Tesla as of this morning. We bought it pre-market. It just went straight up, and it's like everything else. It's starting to come back down again to something a little more equilibrium, uh, given what's happening tomorrow. But my map for Tesla has been for a while that this little consolidation that we're seeing right in here is going to give us a little break to the upside. We click that RTL. That could happen in 3 or 4 days. And then we have to see. Then we have to see. Again, if everything comes down with the market, we start hitting 5,400, 5,200, you're going to see Tesla come right down with it. Um, and the worst thing would be if it breaks out of the RTL, everybody gets on board thinking it's a bullish breakout, and it turns out to be a trap. We just have to be very careful with everything these days. All right. But we're going to ride Tesla as long as it'll give us some return, and we'll keep moving up our stops. I'm going to take a quick look at natural gas, because this gave us such a beautiful, right there in that day, right? Here's your 3-bar reversal. It came down, tested. Let's blow this up a little bit. Came down and tested the 50-period moving average, the rising gap up that held the next day. Bullish, big green stick on pretty good volume, closed on the highs of the day. Gapped up, and everybody's thinking, okay, this is a breakaway gap. No, it wasn't. It was a gap and crap. And follow through today. So I still think natural gas has a decent move. I'm not exactly sure why. I don't have any macro reasons for this. And part of it is that I'm holding a bit of BOIL, which is your 3x bullish fund for natural gas. And I'll get out if it closes below the 50-period moving average. It's just a little lotto. We had it on for a few days, and we moved up stops. And I guess we did. We had a profit stop on it, which triggered out either yesterday or this morning. But we took a little bit of profit on it. But I do think it's got a better move coming. I'm just not. I'm kind of at a loss for real reasons for that, with the exception of, did give us some cycles, right? We're down at the low end of the cycles, but it just, as long as it stays above the 50 in a rising uptrend with a stacked MAs, 21 above the 50, 50 above the 200, it's been in a long-term uptrend, and a very strong uptrend, in fact. I think that this little pullback here is viable, but we'll see. We'll see. Let's take a quick look at oil. Oil is always a good indicator of the overall health of the economy. When everything is booming and new products are shipping and people are traveling and on, you get a demand on oil. Prices generally tend to go up. We've also had and this is one of the problems with natural gas, we've had these new production plants come online, and the drill baby drill, and OPEC doing a bit of increased production. So there are some pricing pressures on the top side on oil as well. But the trend is up. We recovered the 21, then we recovered the 50, and now we're starting to break out into some new ranges. I do think, however, next move is down, and then later in the month, we get a nice rally back up in oil, if and only if the rest of the economy starts coming back online. All right, guys, that's really all I had for you today. So let me see if there are any chart requests. So I'm going to look over here at the live trading room, the Discord room. And if you want to start typing those in, your ticker symbols, I'll take the first 7 or 8 of them, and we'll go from there. Okay. I only see one ticker symbol right now, so I'm not sure if nobody has any interest. Hold on, now a few are coming in. All right. This is Trump's media company, right? So obviously in a very, very dark, deep, horrible, ugly downtrend, we were playing this, we were playing this as a little fun lotto trade during this upside. I think we caught, we bought this little cup here, and we got out on that red stick. And it was like 16 to 30. I forget exactly where we got out. And then, of course, it was way up still from there. Got all the way up to 52. But that happens, right? That does happen. Then it's been a downtrend, more of a short than a long. And now, possibly printing a double bottom, bullish divergence down in RSI. That's good. I'm not going to say anything about the cycles because I have no idea what that reading would be. But I like this 3-bar reversal. So you've got the hammer candle closed up on the highs of the day, follow through day to day. Not really easy to see the volume here because the bars are so small. But it does look like to me that's got a little pop in it. Now, on a double bottom, right, you all know this, the double bottom is only a valid confirmed signal when it gets up above the neckline, which is, you could put that at 23, you could put that up here at 24. And then once it gets up above there, the target price would be the distance between the neckline and the bottom of the double bottom, which would be around 19. So let's call it 24 to 19. That's 529 would be your target price. But of course, it's got to get up above 24 for that to be valid. But a move from here to the 21, which is 21.38, and it's already at 20, so that's a good 5-6% move in a couple of days. Looks to me likely. Back up to 23 to test that close, that little pivot right there, maybe likely. But I don't know. I mean, of course, there are political headwinds here. It used to be tailwinds. Now they're headwinds, and anything can happen, of course. But that's just my immediate 5%, 5.5%. After that, it's a big question mark. Okay, let's look. Oklo, which I think is a. Correct me if I'm wrong, but I think this is a cybersecurity software play. Okay, so yeah, let me put on my divergence indicator. I still have that here. Okay, there we go. That's what we want to see, right? So now, if this is in cybersecurity, let me just double check. I'm not exactly sure. I might be. No, it's not. It's a regulated utility. Never mind. I'm thinking of what am I thinking of? There's a cybersecurity with something similar to that ticker symbol. Okay, so you've got all this bullish divergence down here off of this slightly lower low. That's a good thing. These signals tend to be very short-lived, but the fact that you have 6 indicators confirming that, as opposed to 1 or 2, signals to me that, yeah, you're probably going to get some follow-through to the upside. It's a utility. It should give also some safe haven. I know the other day on Friday when everything was red, the utilities were one of the few green spaces. So if we really do have a weak April, this could be a good place to be. So all of that being said, your first target is the 21 at 27.50. It's only 22.36, so that's a big move. That's about almost a 20% move. Am I right? Okay, it's at 22, and the 21 is up here at 27. Now, of course, it's going to be coming down as the price is going up, so it's not going to meet at 27. But let's say it meets at 25. That's a good 10%. No, I like this as a, go small. It's volatile. It's a big mover. But yeah, I would say that's a thumbs up as a short-term swing trade in a market where it's not easy to find short-term swing trades. So there you go. I like that one. ARQQ, what is this? I don't know this one at all either. I really need my linear regression channels. Let me put those on since I haven't done this in a long time. So we look linear regression channel right here, and we put this on twice. Once, twice. And then we drill down into the settings of just one of them. Go to settings, and we go to the standard deviation. We put one of them at 1.5, the upper, and the other lower at 1.5. And when you do that, you put one on top of the other, you get this nice little powder blue band up here at the top. That's your sell zone. And pink down here at the bottom, that's your buy zone. And the mantra is you buy the pink in an uptrend, you sell the blue in a downtrend. This is a slight downtrend, so it's not really a long setup. The linear channel is not really helping us in this way because we're down here in the salmon zone and not in the pink zone yet. Well, I know nothing about the company and I'm not really going to look it up, but just from a technical basis, I would have to say that this is, a little bit iffy, a little bit iffy. So that's kind of your bigger picture, your bigger pattern. You are coming down into some support at that line. So this is how I would play it. I wouldn't be long now. I would wait till it tags at STL and then reverses. So I want to see a green candle down at around 12, 12:15, 12:20. Green candle, decent volume that closes somewhere at or near the highs of the day. And particularly if it takes out the high of the previous day. So we're not there yet. We don't have a buy signal yet. That's the only way I would buy this. And even then, I would keep a pretty tight leash on it. I would keep a stop just under recent lows. I would look for a breakout above the line. You're probably going to get stuck at these moving averages, which is where you tend to get stuck. And yeah, I just think there are much better setups out there. But I have to admit, this one can really move when it gets going. It probably has a heavy short float. It's probably a tiny float to begin with. A lot of that is short, and then you get the squeeze move like you got right here. Remember, squeeze moves, you need three things, right? You need a small float, you need a heavy short position, and then you need a breakout move. So it won't really squeeze as long as the thing is going down. It will only squeeze when it starts to go up and starts to take out some recent resistance, because that's when people panic, right? That's when they have their stops set right above those levels, and that's when the squeeze comes. So, yeah, I wouldn't be in it now though. Okay, what else? Let's do one of these steel. Let's do Costco. So this was my map for Costco a while ago when it came down into the pink zone of a slightly uptrending LRC. It bounced for a couple of days, and I thought, okay, this is going to go back up. It's going to test the underside of the broken support line, just as we saw with Google. It's a long-term support, and then right back down again. Well, we did. We actually got up there. I don't know what happened there. That was yesterday. It gapped down yesterday. If you can see this, zoom in a little bit. Gap down yesterday went, that can't be a real print. Did it get all the way up to like 995 yesterday? Sometimes you get these, maybe a big order off the exchange that can do that, or sometimes it's a bad print. That didn't seem real. But anyway, it couldn't close above the 21. We are right at the 21 today. It's not too bad, actually, all things considered, right? It is trending higher. It is in a slight uptrend. It is green today when a lot of things are red. So all of that technically looks pretty good. Costco should also be a safe haven in a recession. Our local Costco here, we don't even go to it anymore because you can't find a parking space. We got to Sam's Club because nobody shops at Sam's Club. I hate to say it. And of course, Costco, their products are much better, much bigger range. It's just a great place to shop. So I think it's going to be okay, unless the economy does fall into a recession. You're going to see people really scale back on the bigger ticket items that Costco uses to ramp up their margins. Right? They're not making money on groceries. They're making money on computers and big screen TVs and bicycles and things like that. So, yeah. So if that's going to be hard hit on in a recession. But I do see a bounce back up to test the underside. That would be around 978 or so. Yeah, that looks pretty good. Pretty good. Better than most of what things look like now. What is the name of the cycles indicator? Well, DVS, you won't find it on TradingView because it is a proprietary indicator and belongs to a friend of mine. And he's just letting me kind of test drive it. So I'm sorry to say you won't find it. But there are other cycle indicators on there. If you just type in cycles, under this indicators tab right here, just type it in the search bar, and you'll come up with several. You can play around with some of those and see if you find one that works. What's the pro group trading right now? I'll tell you what. There's been very little trading, very little. Yeah, most guys have been getting to cash last week, yesterday, some day trading today. Yeah, Yeah, obviously those big moves right up and down. There's some day traders that are out there yelping and whooping. Oh, I made my 3 days worth of target practice in 2 hours. That kind of stuff in the group. But as far as long term swing trades, zip, very very little. Most people are really pretty worried about what's going to happen come Thursday morning. Grr. All right. Yeah, nice looking chart. This is really what you want to see. I don't have my 200 on here. Um, yeah, I don't, but it would be down here somewhere. So this is a nice looking uptrend. You've got you can see the LRC, right? Nice, steady, about a 40-degree angle from lower left to upper right. That's what you want to see. 21 is above the 50. The 50 is obviously above the 200. And you've got several tests of the 50 that have held. When the market's down near multi-month lows, this is nowhere near that. We're not too far from all-time highs. Yeah, this is a well, I mean, we actually shorted this when it was up in this area. We shorted this in our momentum letter, and that's the first time I really came across the ticker symbol. I've seen it as an active ticker on StockTwits since then, a number of times, but I know very little about the country. I assume it's a quantum computing, or is it AI, or some combination of the two. Anyway, but from a trading perspective, big green stick yesterday, bullish engulfing, very good volume, and now it's giving most of that back today. And the volume today is pretty heavy, so I would be a little bit careful. But um, as a lower risk lotto trade, given the uptrend and given that you're coming back to the 50, and given the space that it's in, then I would put a stop pretty close, like right about 2130. I know that's not too close, but you got to give this one some room, and nibble a little bit here, and add only if it takes out today's highs. That's how I would trade that one. Okta, that was the one I was thinking of. That's the software cybersecurity play. Thank you. So this is great. The cybersecurity space has been pretty good, not across the board, but you've got Crowd and Fortinet. Fortinet, in my opinion, is the number one play. Crowd number two, and then you've got like a second tier with Palo Alto and this guy and Nice and Qualys. I think there's something in there. There are several others that are sort of in a second tier. I wouldn't play those. I would play Fortinet or Crowd and Fortinet, and leave it at that, because there's just too much competition coming into this space. But it's a very good space. It's been very strong. And actually, looking at this chart, this is very, very good. This is very good. Uptrend, stacked MAs. Didn't even get down to the pink zone. Didn't even hit the 50-period moving average. Inside day bar after a 4-bar pullback. That's a very bullish setup. I like that setup a lot. I just want to see what Fortinet is doing. Similar, right? Maybe not. It's a little further off the 52-week high. So Okta actually is showing more relative strength. That's interesting, because I know it's not as strong of a company fundamentally. And what's the other one? Crowd. Yeah, it looks a lot like Fortinet. Actually, I like Okta of all those. Yeah, Okta looks great. I'm going to add that to my greens list here. And I haven't updated this greens list at all since early last week. So don't look at those ticker symbols. They are no longer relevant. Let's do one more here. CELH. Wow. Yeah, so this was the drinks company that was the number one stock over the past, 5 years or something like that. It was Celsius, and it was Monster Beverage, leading the way higher over a time frame, and I'm not exactly sure what it was, but they were just going crazy. And I've talked about Celsius many times. I had it pegged as a long-term add to my wealth building portfolio and to my family fund. But then I went into Sam's Club, and I started looking for Celsius. I wanted to buy some, take it home, try it out. I hadn't had any, and I couldn't find it. And I knew it was there. I just couldn't find it. And I finally found it right at the very back, behind a whole bunch of other stuff, in a dark corner of the long aisle. And I thought, man, their marketing guy, or their product placement guy, is really slipping here, and that's not good for the company. That was just the first tip, and it just has been in such a long-term downtrend since then. But this is a recovery mode. I like it. I like the fact that it's up here at multi-month highs as opposed to multi-month lows with the rest of the tech market. And it is in a recent breakout. This is a good-looking little flag, bullish flag. Yeah, I know it's up in the blue zone, and I know the mantra is sell the blue, but not when you have a long-term downtrend and you're starting to get breakouts. You get breakouts to the upside, you're going to start to see that LRC, maybe this way, start to slant into positive, more bullish direction as it is already. 21 is above the 50. I think the 200 is probably way up north, but still, that's a good sign. Yeah, no, I like it. I like it. I would say this is a hold. I'm not sure I would be buying it just now. Especially if we go into a recession. I don't know if they've changed some of their setup or their product placement or anything like that. But I would have to dig down into some of the growth. So if you start to see 1 or 2 quarters of accelerating growth, in fact, I'll show you an easy way to do that. Very easy way to do that. Let's bring over market surge. We type in CELH. So I'm a IBD partner for their products, and market surge. Been using it for a decade or more. Love it. I've put in my scanners. Here's my 9090 scanner, by the way. And we have 5 items now. We had 4 items last time we looked at it. Now we've got 5. The new addition is EXLS. Nice. I have my Trend Trade Letter members in this one. Right? Nice looking strong chart. Very good metrics right here. Okay, back to Celsius. CELH. Go to the weekly chart. You can see the numbers here are bad, right? EPS of 11 out of a possible 99 is not good. D for timeliness rating, that's the technical rating, that's not good. However, group B+, accumulation distribution B+, that's pretty good, right? And you're trying to see the relative strength rating rise. It's rising. It's up to 54, which is weak, but at least it's on its way up. Go to the weekly and look at this green line right here. This green line will tell you whether earnings are going, get the earnings acceleration getting stronger or weaker. So you can see very, very weak. I mean, that's a crack. That's just a cracked company. I don't know what was going on here, but that is way low. Then they had a rebound, and now they're starting to, moderate a little bit. A couple of quarters of downside momentum. That's not so good. Now it's gone flat. I would say, you can trade it. I have no trouble with you trading. It's a bull flag. Buy a bull flag. That's usually a good breakout move. But for a longer term position trade, I would wait until the next quarter. It's due up in 12 days. Let's see if we can get that green line moving back higher again. Okay, guys, I'm going to let you go. God bless everybody. Have a great rest of the afternoon. I'll go ahead and produce this video, put it on the YouTube channel, and then we'll be back in the room to trade the rest of the day in a little bit. Bye for now. God bless.